Hi, I'm David Coe, the founder of Freedom Growth, where we help our clients earn passive cash flow in their retirement accounts using real estate. Now, before you start checking out any of our investment opportunities, I want to give you a taste of how we select our partners. They are not chosen randomly. Each company was invited to participate based on the quality of their investment and the strength of their organization. We are presented with new opportunities frequently, and each is analyzed with a very pessimistic tone. We look for flaws. We try to break the model. We question each assumption and ask for verification of their key metrics. We like conservative opportunities that are structured to underpromise and overdeliver. And if we feel like the investment is structured strictly to raise capital, we don't present the investment. Also important, location, location, location. We are cash flow investors, so we are less concerned with equity growth. We look for stable markets that avoid huge boom-bust cycles. The key metrics for each market are analyzed, and if it doesn't project solid growth, we don't present the investment. Now, every investment has risk. Some risks are inherent in the opportunity, like planning for vacancy if you own a rental home. And some risks are inherent in the location. For example, having wind insurance if the area is prone to tornadoes. So if the investment doesn't have the risk properly identified and mitigated, then we don't present the investment. Now, assuming the investment passes our scrutiny, we then look at the company presenting it. Our primary concern is the company offering the investment manages the entire process in-house. We understand that certain tasks have to be subcontracted, but the management has to be under one roof. If the company doesn't oversee the entire investment, especially the property management, then we don't present their investments. We also prefer established companies. We want to see that they've been in business and have demonstrated success for a number of years. If the company is a new venture and they haven't developed a proven system, then we don't present their investments. Just as important as your rate of return is their profitability. If the company isn't profitable, they won't survive and your investment will be jeopardized. If the company doesn't have a solid plan for profitability, then we don't present their investments. Ultimately, what drives every successful business are the people running it. We perform background checks and talk to their referrals. If the operator doesn't have people that we feel comfortable working with, then we don't present their investments. Lastly, managing one real estate investment demands organization and vigilance, but managing 100 real estate investments requires systems, software, and personnel. If the company doesn't have a proven operation in place, then, say it with me, we don't present their investments. If the company somehow survives this gauntlet, our last step is to fly out and meet them in their market. We see firsthand the quality of their renovations, the size of their operation, and get a feel for the neighborhoods they select. Most importantly, we get to know the people behind the investment. If we don't feel 100% comfortable with who we're entrusting our faith to, then we don't present their investments. So you're probably thinking, wow, Freedom Growth has done a lot of due diligence on these companies and I don't have to check out anything, right? Wrong. Ultimately, the decision and the repercussions of what to invest in lie solely with you, and we strongly recommend you do your own due diligence. But we do believe that our rigorous standards give you a huge head start.